Hello, my friends and DTS traders. Welcome to another action-packed week in Forex with me, your host, Omar El Tuki. Last week was a decent week for me. I was able to capture some small to medium-sized moves on the Euro-Yen with a little bit of my action coming from the Euro-USD. Keeping in mind, though, that we didn't get very big moves. It was just 30 pips, and I think some of my trades were 9 and 10 pips each. I think 30 pips was my biggest trade, but slow and steady wins the race, and I'll take a 5% gain in a week any time. So what we've found here since last week was NFP and we got better than expected jobs numbers, even though we had been in a solid decline in the euro, we got a bit of a snapback on Friday. So we had been in a decline. We had finally, as you can see, it bounced once, twice, bounced away a third time essentially before crashing through. Well, as I always say, avoid trading around NFP, especially that one particular news item. We skyrocketed straight back up, within 3,000. So what I've also noticed, and I've placed a line here, is that even though 1.3 thousand is a big round number, the real bottom level of support here is here at 2960. Why that number, I have no idea. But if we're going to be trading this pair going forward, we have to be conscious of this level, that it has capped the downside movement, even though 3,000 hasn't, and it's gotten a bit messy here within 3,000. Keep in mind this is the EURUSD on a daily chart, so I always like to do my overall analysis from bigger time frames like the daily or the weekly, and 3,000 is kind of a battleground. But going forward this week, what we should be looking for is we should be taking shorts that occur below 2960, or we should be taking longs that occur above 3,000. So just make sure you're getting nice solid DTS signals, and if you can move your stop to break even after 20 or 30 pips, then I would recommend doing that very much so. For scalpers, grab your 10 and get out until we start seeing a little bit more continuity to the movement, because we had a very nice uptrend going, and then we broke the uptrend by coming back down towards 3,000. But with U.S. better than expected jobs numbers, we have moved in the other direction. So we'll just have to watch and wait. If you have any doubts, of course, stay away. But I would say good solid DTS signals moving away from 3,000 to the upside are a good idea, or below 2960 to downside. And that's essentially your USD is pretty straightforward to trade. So why don't we go ahead and move on to the pound USD. Okie dokie. Here is the pound versus the US dollar on the daily chart. And as you can see, we have just been in a very much of a downtrend. As we moved away from 6,300, we have now plummeted below the all-important 1.5 mark. 1.5 is a big area. You can see that it took 1, 2, stalled it the third time, and finally broke through on the fourth attempt on the daily chart. Of course, intraday, it would have attempted this a few more times. But now that we're broken below 1.5, I cannot help but think that until the market tells us otherwise, we have to be looking for shorts. We could be looking for pullbacks to 1.5, followed by shorts, or just actually, in the case of such a strong downtrend, any reasonable pullback followed by a good solid DTS short signal should do the trick. Keep in mind, if we are taking longs on the EURUSD, probably shouldn't be taking shorts on the pound USD. So find out which pair has less average daily movement for the day, or which just looks better technically, and go for the one that you think is stronger. I wouldn't take opposite trades, but if you get both in the same direction, for example, if the pound does manage to break back above 1.5, and you can get a long signal plus a Euro USD long signal above 1.3, then that's acceptable. Again, this is pretty simple stuff. It is trending down, so we certainly, if you have the eagle, this is a good opportunity to use it. And that being said, let's go ahead and take a look at the Eagle chart for the pound USD. Okay, here it is. Now I'm going to go ahead and start from last week when it broke below 1.5. You can see here that everything kind of lined up for a good Eagle trade. We had our initial breakthrough. We had a pullback not to 5,000, but just into the shaded area of the Eagle, followed by a good sell signal here, and it promptly continued to move down. Of course, I think 48.5 is a support, but the trade ended up working out for a good almost 100 pips here. So that was a good one to consider. It gets a little bit messier because it's the start of the week now. Again, this was another good sell signal here. We're not getting the extension yet, but it's still early in the week, so we've got to consider that Sunday and Monday trading here is something that we would have avoided anyway. But now that we're into a new week, we'll start looking for better setups, and this should continue on down if the pound USD keeps going the way it's going. Let's go ahead and check out the Aussie and see what's up with that. And here's the Australian dollar versus the US dollar on the daily chart. This pair, to be honest with you, has given us fits lately, and you can see from this sloppy price action here, and these are daily bars, so this is quite a bit of time from looks like the beginning of February all the way till now. It's about a month worth of data here, and it's not looking like it's really going very much. What's the upper part of our range here is 1.0370. The lower part is a little bit 1.0200. So I mean, we're only talking maximum of like a couple hundred pips across an entire month. That's not exactly the waters I like to be trading in, and it doesn't give you the opportunity to take home multi-hundred pip wins. So again, I will be avoiding this one until we get a clearer break on direction. Of course, if you do want to try to trade it, we will either be looking for shorts coming off of 1.0330 area all the way up to 1.0360. It looks like recently there's been another cap around here. Or we can take bounces off 1.0170. Of course, if price breaks below that area, we'll look all the way down to parity, which will be 1.000, which naturally will be an important number. But other than that, I'll probably be avoiding this. We'll be keeping an eye on daily ranges for the Aussie until they pick back up again, because when this pair is trending or trading well, it's a great pair to trade. And with the rollover swap being high, you can get a little bit of bonus money trading it. So we'll just have to keep watching and waiting on this pair. But let's go ahead and check out the yen crosses, because they continue to be, in my opinion, the great area of opportunity for us. And once again, here is our little darling, the euro yen on the daily. I actually took a trade on this today and ended up cleaning up about 80 pips. And it was pretty straightforward. Great DTS signal before this breakout. I normally don't trade first session of the week, but I just wanted to. I felt it was a good opportunity. The euro yen has been moving well, so it's broken back above 121.30 again, and naturally, as we would expect, it's come to rest at close to 126. Of course, the upper limit that we've seen in recent days has been around 127.80. So we're going to be looking at that to the upside, of course, as we break above 125.80 and 126 area. We'll be looking for longs. If we get shorts off of this area, we're looking for shorts there. Any pullbacks to 124, 123, and then of course all the way down to 121.30. We will look to be trading within these ranges as well. But looking at the bigger picture here, this has been a particularly kind of sticky way to trade, as it's been going somewhat sideways over the last month or so. But because we have DTS to give us good signals, we can capture the moves within this. And even within this kind of more difficult period, we can still make some trades. So this week we'll be looking as it moves up or down away from these important support and resistance areas. And that's pretty much straightforward and simple with the Euro Yen as well. And just for further illustration of what I was talking about here is look at these great signals. This, of course, is the I didn't even get this good of a price. I was in somewhere 125. Oh, it's about the same price, about 125.12. And you know, I mean, even if you had taken this signal here, stop loss would have been somewhere down here. Pretty short stop loss. You would have had to wait a little bit, but it eventually won. Had you taken this order and stuck with it, stop loss down here, it would have won. This wasn't a good signal, but even if you had taken it, it would have won. So we've had plenty of opportunities on the Euro Yen lately to scoop up some good trades, and I imagine that will continue. Of course, just straight away looking from this chart, we'd probably want a nice breakout above 126 to look for another signal. For example, I would not take that long there, or we could be looking for reversals on the Falcon or the Hawk away from 126. Of course, the Eagle takes a little bit more time to establish a trend, so you wouldn't want to take the first bounce. But if it broke away from here, you know, on a double top, and then gave you the reverse signal, it could be caught with the Eagle as well. So this will be the pair I'll be looking most to, since it gives us really big daily ranges and the trades have been working great. Let's see its counterpart, the Australian dollar versus the yen. Alright, so here's the Australian dollar versus the yen on the daily chart, and interestingly enough, even though the Australian dollar versus the US dollar has given us fits, this has actually been tradable. Remember, our crucial area before was 95. As we took little bounces below, like I said, for scalpers, it's a pretty good area to grab some little trades. As it broke above 95 again, you can see that it has now moved almost 500 pips. We're 430 pips above that 95 level. And had you just taken a trade and been very conservative with the stop loss, you can see it's run up quite a bit. I haven't been able to capture the whole move. I've gotten pieces of this. We would be looking, of course, at 97.5 was our next line in the sand. That area has held for a long time. So the fact that it has broken above tells me that this pair is certainly back on the move up again. And naturally, now we are talking about a massive whole number of course, 100. So we're going to go ahead and put a support and resistance there. We will see how much it holds. I don't think we have much precedence for this, so. Okay. As you can see from this chart here, which is the weekly, 100 has not been approached, breached, or anything, and this goes back to 2010. Let's see, go back to 2009. The last time we were anywhere near 100 was back in 2008. So we have got quite a few years of data before hitting this point. So that's essentially what we're going to want to do. We're going to want to look back. This is on the weekly chart. You can see 100 did hold, and it looks like we are capped out at around 105. So go ahead and make a mark here. It's like just below 105. So we'll say 104.50. And then from the data that I have, which goes back to 08, it looks like that is going to be the area to watch to the upside. And that should make trading this pair pretty simple again. As long as we follow along with these areas, and use DTS as our guide as far as entry signals go, we should be in pretty good shape. And we'll be watching, of course, all these areas very closely. That being said, I look forward to seeing everybody on the weekly trading live session, and good luck to everybody this week. Of course, if you have any questions, comments, concerns, you can always reach me at omar@dtsforexsystem.com. Best wishes and happy trading to you.